Hello and welcome to this Thursday's morning market briefing. We've got a lot to talk about, but firstly, US stocks close at record high on slower pace of inflation figure, as well as that Vladimir Putin blasts west ahead of state visit to Beijing. We've got lots to talk about in the charts. Also, with lots happening on the economic calendar, but we'll come to that near the end, so make sure you stay around so you can see that. Before we get straight into it, though, make sure you subscribe. The first article to talk about is to do with US stocks. Now, US stocks have now closed at a record high following the latest inflation figure release, showing that inflation has fallen slightly to 3.4% this April. This comes at a time where traders expect hawkish monetary policy from the Fed. However, this figure is now prompting traders to think otherwise. Now, of course, this is a great article leading off the back of what we were talking about yesterday with Jerome Powell's speech in, what we spoke about in yesterday's morning market briefing, being one which was very hawkish, talking about, rates staying higher for longer. And this obviously creates that very negative pressure on the US stock market, as ultimately these lower interest rates that many markets and individuals are hoping for enables firms and individuals to enter the capital markets, use lending to expand, purchase and grow. And therefore, when these interest rates are higher, ultimately these firms aren't able to expand at the same rate and that kind of thing. That's why we do see kind of US stocks being slowed down with their growth and that kind of thing during these sorts of times where rates are high. So ultimately, Jerome Powell's rhetoric, as we spoke about in yesterday's morning market briefing, created that downward pressure on markets, with that adding to the very hawkish image at the moment, which is to do with the Fed's monetary policy. As of course, since really maybe spring of this year, the Fed has pivoted to a very kind of hawkish monetary policy outlook in comparison to, of course, last year's very dovish outlook on markets, where traders were even expecting as many as 6 to 7 rate cuts this year. And now, of course, at least before this inflation figure was released, markets were suddenly expecting the Fed to only cut interest rates one time or two times at most. And this is in comparison and contrast to, of course, the Fed's own expectations at the start of the year to cut interest rates 3 times, 0.25 percentage points in each cut. So, things have been very interesting for the US stock market and everything to do with the Federal Reserve. And we had been highly anticipating this inflation rate figure being released yesterday, as, of course, this sort of figure is always kind of the most impactful really on markets, US stock markets, US dollar, that kind of thing, as ultimately inflation is that key figure which is used by the Fed to form its own monetary policy. And so understanding what the inflation figures are at, understanding what employment's at and that kind of thing, allows traders to kind of get ahead of what the Fed is going to do with its monetary policy. And that's why we're seeing US stocks now respond to this lower than expected figure, with markets pushing higher. So a very interesting time for US stocks, and it will be interesting to now hear from Fed officials, as we are receiving 3 Fed official speeches today. It will be interesting to hear from them and their responses to such an inflation rate figure, as we're always kind of receiving or seeing and listening to these Fed officials' speeches, which are always happening. But ultimately, it's very important to listen to on a day like today, when we've just received such an inflation figure, which is, kind of creating this differing image to what we had previously expected to do with inflation. So it will be interesting to then see how those Fed officials talk about the future of inflation, interest rates, and that sort of thing. Because, of course, on Tuesday, I believe, it was Jerome Powell that was saying that rates need to stay higher for longer, and now this inflation figure might contrast that. So definitely look out for those Fed official speeches. In terms of the stock market, though, we will, of course, course, come to the charts after the articles and start analysing what's actually going on to do with US stocks. So make sure you wait around to see that. But let's get straight into this article with the figure released being in line with economists' expectations and ended a 4-month streak in which inflation came above economists' expectations. Whilst previously to the figure's release, traders had priced in only one rate cut this year, the most recent figure triggered traders to fully price in the Fed's cutting rates by 2 times this year. So a significant change in the way that the futures market is pricing in rate cuts following, of course, this most recent inflation figure released. So I think that's so important to note, of course. Whilst previously to this figure release, traders had priced in only one rate cut this year, the most recent figure triggered traders to fully price in the Fed cutting interest rates 2 times this year. The figure release prompted US stocks to rally to new highs, whilst yields on US bonds fell, with the S&P 500 closing 1.2% higher on the day, whilst the Nasdaq 100, of course, rose by 1.4%. So a very positive day for US stocks. The day before this figure release, Jerome Powell, of course, warned investors that the Fed may be forced to hold interest rates higher for longer in an effort to beat inflation. However, this most recent figure signals a more bright future ahead of interest rate decisions. The most recent figure is also a great positive for Biden as he heads into the US election season this November, where Donald Trump leads in the polls. At the moment, voters still perceive Biden as a negative for the economy, despite some success within employment growth and bringing down inflation. So most certainly these kind of, not only is inflation and the understanding of inflation important to understanding the Fed's outlook and that sort of thing, but it's also important to always kind of look at these economic figures in a political sense and then relate that back to markets. So of course, should Biden win this election, we know that that's somewhat going to be a negative for markets. So that's how we, that's why we have to look at politics. And so understanding whether, inflation is coming down before the election, which is good for the US economy, good for voters, how that might shape voters' perceptions going into the election and who might win as a result of that is always so important, as of course the US economy is always the most important indicator for who is going to win in the next election. That's all to talk about in this article, though. Next article to talk about is to do with Putin and his state visit to Beijing. Now, the Russian President Vladimir Putin has now laid out a heavy verbal attack on the West. This comes ahead of his visit to China this week, where he's expected to stay for 2 days. Now, most recently we've spoken a lot about Putin and a lot about Xi Jinping, so this article kind of combines those two together and relates that to the West. Now, of course, in yesterday's morning market briefing, we were talking about the Biden administration implementing new sanctions, tariffs onto China with regards to Chinese EVs, as well as, of course, microchips and that sort of thing. So key industries, key new technological developments, which the US wants to protect their own markets from and want to, allow US markets to build before, Chinese interference, basically. And, this is also relating to a previous article that I believe we spoke about last week to do with Vladimir Putin, of course, renewing his threats to do with nuclear war against the West. And of course, he made those claims and warnings against the West, saying that basically the West needs to be careful with their actions, as ultimately, should they kind of hurt Russia in any way with their actions directly, should somehow the West attack Russia in any single way, Russia would be open to the use of nuclear weapons on those NATO countries, those Western countries. So, we've obviously got very high world tensions at the moment in both the Middle East and Russia's invasion into Ukraine in Europe, but also these added threats always push world tensions higher, add to the volatility index, and obviously affect the way that markets do perceive the world situation, and therefore affect the way that traders and investors put their money into certain safe haven assets, which is why this kind of article is so important to understand. This kind of topic is so important to understand, and why articles like these help contextualize the issues which are going on, which are also affecting markets in different ways than we usually talk about. With his speech attacking what he called Western elites for the war in Ukraine, and he also laid out his own vision for Russia's and China's world order. He made a key point that he and China ultimately have advocated for international law, but ultimately he rejects Western attempts to implement such with arbitrary rules and law. Putin is expected to arrive in China today, and this trip marks the first foreign trip for Putin since he was sworn in for his 5th presidential term last week. The trip lays out meetings between Putin and Xi Jinping, who, just like Putin, has laid out visions of a model of global affairs in which the US is not leading. China, of course, has refused to condemn Russia's invasion into Ukraine and has simply stated that they are third party to the Russo-Ukrainian war and that they should not be blamed for it. So, an interesting article there. It will be very interesting to see what comes of this meeting. Of course, as we spoke about, this is the first foreign trip for Putin since he was sworn in for his 5th presidential term last week. So it'll be interesting to see what kind of discussions and public statements are made. Of course, anything to do with a uniting front geopolitically will affect world tensions, especially in the times that we are in. So that's the key thing that we're listening out for. But also anything economic, of course, as recently we did receive the news to do with Biden implementing new tariffs on Chinese exports to do with EVs and microchips. So it'll be interesting to see if they can kind of come to an agreement there as well. So listen out for anything to do with this topic, of course, and keep your eyes on similar articles. That's all to talk about in the articles, though. Moving on, of course, we are talking about the charts, where we are beginning, as always, on the US 30, talking about US indices as a whole. But as I said, more specifically, we're looking at the Dow Jones for the moment. And of course, it's important to start on the US 30, the Dow Jones, on days like today, when we've just received news to do with inflation, with this greatly affecting US stocks, as we spoke about in the first article. So, it's interesting to always see how markets are responding to new economic data releases and that kind of thing. Now, despite the fact that, the inflation figure did come in alongside what economists were expecting, so we'd expect markets to have already priced in that kind of movement, ultimately, markets responded to the news in a very bullish manner, with the US 30, as we can see here, climbing in response to that recent inflation figure reading. And here we've seen now price push up into this higher area of liquidity that we recently noted as the next level which price could interact with, depending on the inflation figure that we were to receive yesterday. As I did note in yesterday's morning market briefing, that inflation figure would be so important to seeing where the US 30 does go next, and I did note this as the kind of area which price may make its way up to, as of course this did also line up with that minus 27.2% Fibonacci extension level. So a very key level there, which price is currently hovering within. So it will be interesting to see how markets do, well, how price does respond to such kind of a bearish liquidity level this week and today, as whilst that inflation figure was showing that inflation is coming down, ultimately it's in line with economists' expectations. So how much of that movement wasn't already priced in, we'll have to see. And so this level could definitely provide that bearish momentum for price to swing back to the downside before any moves are then continue to be made to new all-time highs. As whilst on other assets such as or other indices like the S&P 500 or Nasdaq, where price has made new highs, ultimately on the Dow Jones, price has still not made new highs, as represented by this line, which marks those previous all-time highs. So it will be interesting to see whether the US 30 can find that momentum to break above or not. But staying on the topic of the US, we are of course talking about the dollar, which has absolutely dropped following that most recent inflation figure reading. Now, on Tuesday, of course, price was still hovering above this key liquidity zone, which price had almost been ranging within for a small bit of time, whilst price did kind of somewhat break out and come back in. Price has kind of stayed between those two liquidity zones for some time, and we were kind of explaining, as I just said, on the US 30, but on the kind of inverse, that basically whatever that inflation figure is, the dollar is going to be affected greatly. And as a result of that inflation figure coming in below last month's inflation rate figure, ultimately, markets began to price in a greater number of interest rate cuts this year, and therefore the dollar lost some value in that sense, with the dollar therefore dropping quite significantly, really, in a quite dramatic manner, back down to levels not seen since the start of April, and definitely we've now sort of reclaimed this entire piece of price action. That's very poor drawing, but we've kind of reclaimed this entire area of price, which markets had pushed the dollar up into and then had made its way back down from. So it's crazy to kind of see the way that these differing economic data releases always affect markets differently and can take back any progress made in one direction very, very fast, as the movement currently for the dollar is one which is very bearish in a very significant manner. So it will be interesting to see whether markets can make its way down to this area of kind of where price was able to spur to the upside. It will be interesting to see if markets can make its way down to that level, of course. That's all about on the dollar, though. Still kind of on top of the dollar, though, Euro USD is, of course, important to note, which as a result of that dollar news today to do with inflation, the euro has been able to push above this key area of resistance and liquidity, and ultimately push back to levels not seen since March. So Euro USD is most certainly on the upswing currently and is reclaiming all these kind of this very bearish downswing that was seen back in the start of April. So it will be very interesting to see how long a Euro USD can hold out on this bullish move, whether price will maybe hook back and interact with one of these key liquidity zones first before continuing higher, or in fact is this a fake out? That's kind of unlikely based on the inflation figure, but ultimately, because that inflation figure did come in line with the economists' expectations, it's questionable how relevant it is, because surely markets should have priced that in already, but you'll have to judge that one for yourself. Next to talk about, though, is pound yen. Not too much to say on pound yen for the moment, apart from the fact that ever since really the start of May, price has kind of been on this slow bullish uptrend, but yesterday markets interacted with this key area of liquidity and resistance that we noted previously, and has now sold off somewhat from that area. Not in a significant way or a very volatile way, but ultimately has sold off from that level nonetheless, with that area providing a great deal of resistance. So it'll be interesting to see whether markets will now swing back down to the downside, maybe down to these older areas of liquidity, or in fact is price still on the uptrend, and will price break above that kind of psychological level around 197. So keep your eyes on pound yen. Next talk about, though, is Bitcoin, which swung greatly to the upside today following that US inflation figure. As I've referenced many times, Bitcoin is surprisingly influenced by the Fed's monetary policy and therefore US economic data. And so, that inflation figure today, which devalued the dollar, pushed a lot of money into Bitcoin, which swung to the upside, swung above that $65,000 a Bitcoin level, and is now interacting with this higher area of liquidity that we've noted out previously. So it will be interesting to see whether price can push above that zone, or will price sell off and retrace following interacting with that zone. Next talk about, though, is to go to with gold, which is continuing to push higher at the moment after reacting to this 61.80 back down there around this older area of liquidity. So price is on the upswing currently and is making its way up to this minus 27.2% Fibonacci extension level, which lines up with this key liquidity zone. So keep your eyes on gold. It'll be interesting to see whether price can reclaim all that territory and make its way up to that area. Lastly to talk about, though, of course, is oil. Still not much to say. Oil's price is still around that $83 a barrel level. So yeah, not too much to say. Price still hasn't moved very far since the start of May, May the 3rd. So not too much to say. That's all to talk about on the oil though, and that's all to talk about on the charts. Lastly to talk about, of course, is the economic calendar, where we are receiving some significant data today. Not loads, but some significant data, so make sure you're listening up for all of this. Now, firstly, we are receiving the Japanese GDP growth rate figure, as well as the Aussie unemployment rate figure and the Japanese industrial production figure. Followed by that, in the Eurozone, we are receiving the Italian inflation rate figure and balance of trade figure. Followed by that, the US building permits figure and the US industrial production figure. And finally, and arguably very important following yesterday's inflation rate figure, we are having numerous Fed officials speak today, so make sure you're listening out and understanding the rhetoric from such officials and understanding therefore how that will affect markets. That's all to talk about in the economic calendar. We've covered lots in the articles, lots in the charts, and lots in the economic calendar. You have a great trading day, but that's all from us at Wildwood Capital. Have a great one. See you later. Bye.